Howard, thank you so much for joining us today. I'm looking forward to hearing your voice and seeing your charts. You're now the presenter.
Can you hear me? Hi there.
Hi, how are you? How you doing, Howard?
Dale, very good, mate. How are you?
All right, so you heard my intro of you earlier. I saw you were in the room.
Yes, I did, and yeah, you can join my band anytime.
Thank you. Oh, at least, how about being a roadie, buddy? That would be enough fun for me, and keeping all the women away from you, being your bodyguard.
That is an issue sometimes.
So, you know, it's telling the community, Howard, that you I believe sent me a message on LinkedIn that you wanted to talk about the euro well before, and the dollar peaking for the year, well before this recent decline in the dollar ensued and the recent rally in the euro ensued. And then you said, well, you know, when I gave you this date, June 19th, you said, well, maybe by then we'll be in some type of corrective pattern for there to be another entry. So I'm going to hand it over to you. To me, it looks like you're showing the dollar as C was being corrective, and you're looking for a pretty good breakdown to the low 80s for the rest of 17, correct? Am I reading your charts correctly?
Absolutely, yeah. So for me, the big picture for this thing is, you know, sort of multi-decade, multi-year. Not everybody likes to look at these really long-term trends, but for me, this is the big picture for the dollar. What I think we've been doing since what 04, 05 has just been a sideways correction. We had the you know, pretty much an impulsive move down from, I think, 2001 or 2001 to the low. And we've been effectively going sideways in a range for that entire period.
I've also noticed, Howard, that each rally has been weaker. Like the rally you show from 95 to 01, 02 was a much stronger rally. I think there was even a stronger rally prior to the all-time high that was even stronger than that. So each successive rally or correction, as you have it labeled, is less and less dynamic.
Yeah, exactly. I mean, for me, the two patterns are, you know, from time to time I sort of get my Elliott head on, and I see things, and this is something that really stands out, where you have the impulsive move down, which looking at the 1980s to 90s movement, you had the post-Plaza Accord move. I think that based out in like 1988. You had a strong rally in the A leg, and then from that point onwards, topped out, and the trend continued. And we had all these overlaps. You know, the market was trending lower, high, lower, high, lower, low, but you had a lot of overlaps, which you know, in kind of typical technical terms, we're not big fans of that kind of thing in terms of health for the move. You know, usually B wave or kind of ending C or wave 5. So in that first sequence, we had the choppy decline into the $95 index low. Now that for me is a very similar kind of begrudging almost move, a bit like the you know, 2006 to 2011 decline in the dollar. So we saw new all-time lows for the dollar, but the move was really not in a big hurry to get there.
Okay. What would change your mind? What kind of price action would negate this count?
I want to see it really on dollar index wise. I think it's got to really get back above 101, 102.
Okay.
But you know, you can have these kind of corrective bounces as well, because if you look at the previous one, I think we're basically in that sequence there. Can you see that on the screen?
Yeah, yeah. So it rallied and put in almost equal the high, but so that would you know, we could get a rally back to. Yep. If 104 was a high here, we could get a rally back to 101, 102. Turn the market real bullish, the dollar again, looking for new highs, and then fail.
That could happen. That could happen. But okay. I think we're kind of a bit more in the sort of the tipping over phase, because it has started to move quite a lot recently. You know, good news is now good news, and bad news is kind of being ignored. So you know, it's nice to see some of that. So yeah, long term, you know, massive bear. I'd like to tie this in a little bit with some of the politics that's out there, because I mentioned before that I did an article at the back end of April as well, just looking at the Republican and Democratic tenures. And going back to Nixon, it appears that for whatever reason, Republican administrations like to see a devaluation in the dollar of around 14–15%. Whether it's by accident or by design, it seems to happen. It has happened. Whereas the flip side, Democratic administrations have seen an average rise of 15%. So don't know why it happens, but it just has.
So what's your preferred short against the dollar? Is it euro? Is it cable? Euro pound has been performing very well up till recently, which implies the euro continued outperformance of the euro over cable. Besides the dollar index. Oh, okay. So here we go.
Yeah. Well, that's the thing with sterling. The jury's out a little bit. With me, I think the jury's out a little bit on the yen and on the pound against the dollar. So I'm not in a massive hurry to attack those ones, because I think there could possibly be one more final low in this thing just to complete that sequence down. I think when I last came on, I think we were talking about seeing the sea leg when we were here, and I think
how long ago was that, Howard? The last time we talked?
That was May 2014.
Oh wow, that's a long time.
I know it goes by, doesn't it?
Yeah, it sure does. Yeah.
But for me, that was always I was ready for this kind of big move up in the dollar, big move down in the non-dollar currencies. I think the euro has made its ultimate low, whereas the pound maybe not. I need to see how it goes from here. But I think if we can get back above this 135, then that will that will say that we've definitely seen the bottom. So I think the jury's out a little bit on that one for the time being.
Okay.
So yeah, just flipping back to dollar index again. So the political side of things, I think is definitely favourable to a lower dollar for whatever reason.
Well, our president said he would prefer one a couple of months ago.
Exactly, I think he's going to be working towards it. There might be some jawboning. Who knows what goes on behind the scenes in terms of twisting arms and things, but I think he'll get his way. Whether he does it, whether the market is responding to him favourably, or whether I think one way or the other. And there could even be some positive euro news in here, because we've had a lot of bad news thrown at the euro over the last few years as well. So we could actually start to see.
And this is a euro chart we're looking at? Yeah,
this is kind of euro and also pre-1990.
Deutschmark, using the Deutschmark as a proxy.
Exactly. Okay. So the December, January dollar top, euro low, based right on that trend line. So that could be something for a long-term bullish argument as well. Obviously, it's gone up a little bit since.
Very nice telescopic view there. So 120 looks like it would be a natural spot.
Easy, yeah, I think so. I think more like 130. Personally, I think whether we see it, we could eventually see a new high in this thing. And the interesting thing is, people ask the question, what could cause it? I don't know. what caused the last two rallies in the currencies against the dollar?
I don't know. What did? Yeah. Confidence crisis. I know going into the Plaza Accord, the bond market was in trouble. That was Jim Baker. It caused the '87 crash. I'm not sure about the other historical fundamentals behind the dollar sell-offs. I could say from the financial crisis low, it was aggressive easing by the Fed. Everything, when the dollar went down, everything went up. It was risk on with the dollar going up from March '09, or it looks like you have it from all the way '03. Maybe that was the other bubble. And it mainly Fed action that we had nominal gains, like the dollar dropped 30%, the market rallied 30%, but that was more like a 30% gain in nominal terms, not in real terms, because the dollar dropped that much.
Yeah, it'll be interesting. I mean, for whatever reason, this thing seems to want to be trending higher, going back to the when they let the thing float. So.
Okay, so I guess the parity bears are going to have to wait another 5–10 years
I think so.
for that to happen.
Okay. I think so.
I wonder I wonder what's going to make them give up. It's interesting, you know, one of the biggest Euro bears that I know of is Raoul Paul.
Yeah.
And I'm going to be interviewing him in July. I mean, he was talking 70-cent euro. So,
Yep.
what, you know, it's probably going to take some time to convert some of these guys,
Yep.
probably at least closing back over 120, 130, something like that, don't you think?
Yeah. Yeah, no, I think that's invariably how the forecasters work, isn't it? They kind of there's a lot of you need to see the market go higher to change to a bullish forecast, and all the rest of it. You see it with the Goldman Sachs and all the other guys. They chase the market, but that's the way it works in this world, isn't it?
So then the euro would be your preferred short, your preferred long. What would your, besides the dollar, what would be your preferred short during the dollar decline?
I like the commodity ones as well. I like Aussie and CAD.
Okay.
Let me just see. I think CAD looks pretty good. I think we've completed a second wave bounce.
Yeah.
I think that is ready to crack.
Okay, so you're looking 115-ish?
Yeah. Yeah, I think that.
Yeah, do you think you know what I think might surprise people, because you know crude, everyone's been following the crude Canada correlation, Howard, yeah. And I think what's going to trip people up is the crude still looks negative to me. I would think that if we were going to go, most people would say if we were going to go to 115 in Canada, crude should base here and rally to $60, but I think it might trip them up. I think crude's going to 40, maybe sub 40, and Canada could still go down.
Yeah.
Could a possibility be for dollar weakness? You know, part of the reason it's been strong has been, of course, it's a reserve currency, it's a petro currency, and if there's a bear market in crude, there's not as much demand for the dollars, or could it be the fact that our adversaries are trying to create financial systems to weaken the reserve status of the U.S. dollar? Do you think we'll lose reserve status if you're right and we see a 160 euro?
Yeah, that could be one of the stories. That could be one of the stories, that's the shifting away from the importance of the dollar. I mean, we've seen a lot of moves in China as well, aren't we? In terms of becoming, stepping onto the world stage and the One Belt and everything.
Yeah, and Russia has created a new type of, comparable to the SWIFT system. So they're developing other ways of exchanging currencies, and I would assume that a lot of people at every euro high, you end up hearing rock stars wanting to get paid in euros instead of the dollar. That happened at the last time. Or countries wanting to get paid for their oil, like Saddam, in euros or gold instead of the dollar, which I think was one of the reasons, not WMD, that we went in there for hegemony. So this could end up being kind of a mortal blow for the U.S., having enjoyed this advantage of being the reserve currency.
Yeah, it just seems to be the way the wind is blowing there with the current administration, I think. I know there's been, on the campaign trail, there was a lot of talk of isolationism and America first. Since then, there's been a few forays into foreign lands and things like that. But I think his instinct is to be more isolationist and to protect America.
So putting America first is going to make us last.
I would not say that for sure, but I don't think it's a good idea. That's my own opinion.
Okay, buddy. All right. So you like Aussie? What were your Aussie targets to the upside? I know some people are talking 82. Are you looking higher than that?
Yeah, Aussie looks like 90, I think, to me. Let me just find the. Yeah, I think Aussie, we're again in a sort of a third wave position. We're just based out after making the low back end of last year. Consolidation, which I think is bullish, and then once we get above these highs here, then we're away. It looks like a 90 plus handle to me.
Could I extrapolate these views into a stronger precious metal environment?
Yeah, although gold, I'm glad you come on to gold, because I wanted to talk a little bit about this gold and euro dollar correlation. gold is stuck in this constricted range here. I think it will eventually break to the upside, although I need a bit more confirmation. We've got this trend line that comes in from the 2012 high. This is on monthly closes, by the way. But the interesting thing, just going back to euro and gold, and you're just looking at the two things together, is that they were going up together for quite some time till the the financial crisis, 2008. We saw new highs in gold, lower highs in euro dollar. So we had this kind of bubble in gold, and since then the gold kind of came all the way back to the pre-bubble levels, and we're just basing above the pre-bubble levels here around, what is it, 1050, 10.
Yeah.
So it's back down to normal level. If you thought it was overbought back here, it's not overbought here, in my opinion.
Okay.
So, 1365, it seems an eternity away at the moment, but that would be a big upside trigger for me on gold, and that would tell me that we're doing new highs. Yeah.
Where would you be probing it? I know there's also like that little red trend line you're showing would come in at 1240. And is there a possibility that really the new gold is euro and not gold, and we get one more washout under 1050 while the euro's, maybe pulling back, or seems like the relative strength is in the euro now over the gold?
I agree. I totally agree. It could be one of these things where it might break this little trend line, then just come back and stay in a range.
Okay.
So yeah, I wouldn't, as I said before, I wouldn't be massively confident in buying gold here for the move higher. I'd rather see a bit more time and maybe get the break above 1365. But I think the euro is the one, really.
Do you have a view on U.S. dollar yen, which is a risk-on, risk-off currency, has a lot to do with yields in the U.S. and
yeah, I'm a little bit on the sidelines on this thing. I think it's going to go down with the dollar eventually, but it may be stuck in this little range before we can do it. I think it's basically maybe 105 to 120 or something before it breaks again. I think that was the first crack in the trend from here to the recent swing low there, 98.90. But I think we're effectively stuck in a bit of a range until it finally goes. It may need the stock market to something to sort of crack the stock market before dollar yen can go.
Yeah, I was kind of thinking that your 1 or A and equality from 2 or B would take it down to 90.
Yeah, but it may take time before it actually decides it wants to do it. It's not for me. It's not as strong a view as say Euro, Aussie, and CAD against the US.
Okay. Were there any other instruments you wanted to share today?
I think that's pretty much it.
All right.
Yeah.
And why don't you show your website, Howard, and how people can get a hold of you, and what's your business model? Are you mentoring? Are you sending out alerts? What are you doing? What are you doing for, say, the retail public?
Yeah, so a lot of different things. Things like training, that kind of thing, one-on-one. I do signals, but that's a bit more select. I need to talk to people directly on that one because I'm not aiming for the individual person at the moment on that thing.
Okay.
So yeah. On top of that, I manage money for a Swiss company, which I'm one of the founders and partners. Easy New Alpha Partners. So yeah, just a few different things on trading, analysis, and mentoring.
Okay, are they a broker or a money manager, that Swiss company?
A money manager, asset manager. We're Swiss licensed money managers.
I see. Okay, Howard. Well, thank you. You want to growl a little bit like a bear? Because you are definitely. You want to play one of your band's tunes to take us out?
Oh no, I'd be very embarrassed about that.
I mean, that video. I forgot the song you sent me, but that was a great set that you guys were playing. I want to thank you so much for being here, Howard. It was. Let's not let 3 years go by again. It's been quite a 3-year period for me, and I'm so glad that you reached out, and promise you that it won't be 3 years next time for us to get updated on what you're seeing and really some great views and very nice. I love telescopic views, and you were like Galileo today, Howard. So thank you so much, my trading warrior brother. Good hunting during this dollar bear market, and keep in touch with me, and we'll do this again.
Looking forward to it, Dale. Thanks, mate. All the best to you.
Thank you very much. And guys, you can follow Howard Trend at break and retrace _ what's the number, Howard?
3.
3. Break and retrace.
Yeah, at break _ retrace 3.
All right.
With the capital B, capital R.
All right, Howard Friends, a must follow. Thank you very much, Howard.
Great, guys. Good luck to everybody out there.
Thank you very much, Howard. Take it easy.
Cheers.
All right,
bye-bye.
Bye. Thank you, Face. As you can see, Jess, he liked it. He's talking 90 in Aussie. Another great interview. And I want to thank Steve Volge for his review of the markets, and Stelios talking about cable, and Blake coming in here and telling people to take a vacation, but be alert going into. So if we do get this break in euro down towards 109, 109.40, it's going to be a gift according to the scenario that Howard painted. Remember, don't just count your pips, count your blessings, everybody, and see you tomorrow for Turnaround Tuesday. Adios.